Hey everyone, managing over $10 trillion has repeatedly spotlighted why only a select few cryptocurrencies have real staying power. And right in that conversation, he highlights assets built for actual utility in global payments, the exact space where XRP has been dominating for years. As XRP trades around 210 today, November 21st, 2025, amid a wave of new spot ETFs launching left and right, insiders are connecting the dots. This could be the spark for sustained institutional demand that changes the game entirely. Stick around because we're diving deep into the latest statements, the fresh ETF launches hitting the market this very week, on-chain data showing accumulation, and why analysts are modeling scenarios that point to significant upside potential in the months ahead. Let's kick this off with the core of what's driving the conversation right now. Robert Mitchnick, BlackRock CK's head of digital assets, has been crystal clear in multiple public appearances and reports this year. Most cryptocurrencies are speculative at best, lacking true durability. He compares Bitcoin to digital gold, a store of value that's earned its dominance. But when it comes to utility-driven assets, he emphasizes those that solve real problems like efficient cross-border transfers and settlement. And who fits that description perfectly? XRP and the XRP ledger, designed from day one for fast, low-cost global payments. Just look at what happened at Ripple's Swell conference recently. BlackRock CK sent Maxwell Stein, their director of digital assets, to deliver a keynote, praising the readiness for large-scale blockchain adoption and crediting Ripple's foundational work on practical infrastructure. Stein talked about trillions in assets moving on-chain and their own tokenized fund. Bedell is already expanding with integrations that play right into the strengths of ledgers like XRPL. Mitnick himself, a former Ripple executive, co-authored valuation frameworks years ago that explored how utility assets could capture massive market share, leading to fair values far higher than today's levels in adoption scenarios. But here's where it gets even more intriguing. Fast forward to today, and the XRP ETF landscape is exploding. Canary Capital's spot XRP ETF launched last week with record day one inflows topping $250 million. Bitwise just filed their 8A form, securing the ticker XRP on NYC, set to go live as early as tomorrow. Gayscale and Franklin Templeton are lining up for November 24th launches, with analysts projecting hundreds of millions more in initial flows. Community reactions on X are off the charts. Posts from verified accounts and influencers racking up thousands of likes, highlighting how these ETFs could lock up circulating supply rapidly, creating the kind of demand shock we've seen with Bitcoin, but accelerated for a utility-focused asset. Remember, this is all educational breakdown, based on public data, definitely not financial advice. I'm just connecting the publicly available signals for the community. Now, let's break down why XRP's fundamentals make it stand out in BlackRock CK's lens. The XRP ledger settles transactions in 3 to 5 seconds for fractions of a cent, handling thousands per second without the energy drain of proof of work. With ISO 2022 now adopted by over 11,000 financial institutions worldwide for trillions in daily flows, XRP is the native bridge asset compliant with that standard. Ripple's on-demand liquidity uses XRP to eliminate pre-funding in corridors, saving banks billions in trapped capital. Analogy time. Think of the global payment system like an old highway clogged with toll booths and detours. Slow, expensive, error-prone. XRP is the high-speed bullet train bypassing all that direct and efficient. BlackRock's tokenization push, with now over 2.5 billion integrating stablecoins like RLUSD, aligns perfectly because efficient settlement layers are key for real-world assets moving on-chain. Projections from firms like Boston Consulting Group see the tokenized asset market hitting $16 trillion by 2030. Trillions that need fast, reliable bridges. Diving into today's market action, XRP is holding around 210 after a pullback from recent highs near $230. We've seen volatile trading with ETF hype cooling temporarily, macro pressures, and leveraged positions unwinding. But on-chain metrics tell a different story. Exchange balances have dropped sharply with millions of XRP moving to long-term wallets weekly. Whale accumulation is evident and holder profitability remains high for those who entered earlier this year. Fresh from X today, high engagement threads breaking down how ETF inflows don't hit spot markets instantly, issuers by OTC or over time, but the cumulative effect could absorb massive chunks of available supply. One analyst post with thousands of interactions modeled that at current launch paces, ETFs could lock up billions in XRP value within months. Another highlighted BlackRock CK's cautious approach, Mitnick stressing fundamentals over speculation, positioning XRP as one of the durable few. But wait, let's address the doubts head-on. Because if you're watching this and thinking, we've heard institutional adoption promises before, you're not alone. Myth 1. XRP has too much supply. Reality, over 55 billion in escrow, with predictable releases burned via transaction fees, and effective circulating supply tightening as utility grows and holders lock up. Myth 2. ETFs haven't pumped the price yet. Bitcoin spot ETFs took months to ramp. Early XRP funds are already outperforming many 2025 launches in initial volumes. Myth 3. Regulatory overhang. With the SEC case resolved and clarity achieved, plus Ripple applying for a national bank charter, barriers are falling. BlackRock CK wouldn't send executives to praise the tech publicly if they saw red flags. Now for some what-if scenarios to keep you locked in. What if more major players like Franklin Templeton and Bitwise pull in $1,200 million each in the first weeks on top of Canary's strong start? Models factoring sustained inflows and payment volume capture show XRP potentially reclaiming $3, pushing toward $5 or higher by mid-2026 in base cases. Optimistic adoption paths with tokenization accelerating have been discussed in frameworks reaching double digits, not wild speculation, but based on capturing even a fraction of cross-border flows or RWA settlement teasing further. The tokenization wave BlackRock is leading could favor efficient ledgers. Their Boodle Fund expanding partnerships, hinting at broader integrations. Community posts today are buzzing about supply dynamics shifting permanently. Expanding on-chain trends, data from sources like Sentiment shows retail capitulation during dips, often a precursor to rebounds as smart money accumulates. Long-term holder net position positive, exchange outflows accelerating. Classic setup seen before major moves. Historical context, XRP has surged over 300% in strong November months before. With ETFs live and more incoming, this could echo that on steroids. BlackRock CK's Mitnick noting institutional adoption is still early but accelerating. Perfect timing for utility assets, countering more pain points. If you're frustrated with the dip today, understand corrections of 10 to 20% are healthy in bull markets, shaking out leverage before the next leg. Most XRP holders are in profit. YTD fundamentals stronger than ever, building excitement. Picture the XRP ledger as the backbone for tokenized stocks, bonds, real estate, trillions needing sub-second settlement. BlackRock's vision aligns, Ripple's tech delivers. More depth on Mitnick's background. As a former Ripple team member, he understands XRP's design intimately. His valuation work with economists explored success cases where dominance in payments leads to substantial re-rating. Today's X-Buzz continued posts celebrating Bitwise's ticker grab, projections of billion-dollar inflows, threads on how OTC buying avoids immediate pumps but builds underlying strength. Analogy 2, ETFs are like dams holding back water. Flows build pressure, then release in waves as creation units demand physical XRP, addressing FOMO. Early Bitcoin ETF buyers saw gradual then explosive gains. XRP's compressed timeline with multiple launches could compress that cycle. Climactic build, all signals, institutional praise, ETF momentum, on-chain tightening, tokenization roadmap, converging at $210 with dips as opportunities. This feels like positioning before broader recognition. Recapping the wins, BlackRock CK executives validating XRP's utility publicly. Record ETF debuts, supply dynamics favoring holders, real-world use cases scaling. The community has held strong through years of noise. Now the fundamentals are shining brighter than ever. We're in an exciting phase, early in the institutional chapter with massive potential ahead. Stay informed, stay patient. The XRP story is far from over. If this deep dive gave you valuable insights into why XRP remains positioned for the long term, hit that like button to help the algorithm reach more people. Comment your thoughts on where XRP heads next with these developments. $3 soon, higher in 2026. Subscribe and turn on notifications for more in-depth analysis on XRP and crypto trends. Share this video with the community. Together, we're stronger. Let's keep building. See you in the next